Alright, hello everyone and welcome back to another Forex Market Preview. My name is Jason Stapleton and I am your fearless host to navigate the currency markets here every week with you and give you some valuable insights on what I think is going to happen. And today we're going to be looking at just a few pairs, and I'm going to be talking a little bit about what's happened here recently. The big news this week was basically in the ECB's announcement that they were going to do whatever was necessary in order to basically preserve and save the euro. Now, I'm unclear why that's news. It's as though anyone expected anything less. It's that or allow the euro to fail. So you knew at some point the ECB was going to step in and that you were going to hear some sort of verbiage like this. But what is interesting is we saw Spanish yields drop by about a full percentage point on that news, and you saw the euro, the pound, just go into straight vertical moves north after that. Now, I talked with both the private client group, I think mainly the private client group on that after that announcement came out. And my expectation was that we would continue to see some upside, but that I'd be watching some areas to look to get short, that I was basically going to be fading this rally, because we've seen this type of thing happen before, where we get some very stern news from the ECB, and it looks like they've got a plan together that's going to end up paying dividends, and it would appear that everything is solved and that we've staved off disaster, and the market gets an initial reaction of jubilee and excitement, only to then immediately, after it's had some time to sink in and they actually look at it and they say, well, wait a minute. This plan really doesn't have as much legs as we would like, or we're not really clear exactly how this is going to happen, even though they say it's going to happen. And that's what you're going to see again. I'm not going to get into all of the fundamentals that go along with it, but Europe is in very, very, very bad shape, as I've been saying for the last 2 years or so, that when it comes to the fiscal house of the sovereign debt that exists in Europe versus the United States or Japan, Europe is in by far the worst shape, and you have Greece that we've seen fall, Ireland is in bad shape, Spain, Portugal, Italy, France, which nobody is talking about right now, but mark my words, France is going to be a problem. A very, very, very big problem. So if you guys are living in France right now, I'm sorry, I don't mean to, it's not my intention to be cruel, but you're in for some real hurt. There are some very, very bad numbers coming out of France that I won't get into at this time, but because that's not really what the Forex Market Preview is about. But just understand that this is not going to end well for Europe. It's just not. And so what we need to do is we need to be focused on the technicals, and if we can find a technical reason to be short here, that's what I'm looking at. And as we look to the euro, we're going to notice right now, let me just draw your attention, we'll start off right there on the euro. Looking at the trend line that has existed since back here around May of 2012, we had a straight decline to about 123.50s. Then we had a rally back up to 127s, followed by a break of structure down into a low about 120 before we now caught the rally that after the ECB announcement. Now, if you look left, market now ignore these two candles. If for some reason they're reprinting the candles here, and they're actually both on the same day, I believe. Well, yeah, both on the same day. So this candle here, on the final day, we came right back up and tested previous structure support, the last support level that we bounced off of before we broke down. And now the market has come right back up into that. If I break, and we've also, during that rally, run right into trendline resistance. We didn't get in there very deep. I mean, it wasn't a strong test, but it was a test of that trendline resistance. Market was coming out of an oversold condition right up into that previous structure support, which should now maintain resistance. Now, as we look at this, let me drop down to a 4-hour chart, and let's ID some of this. It looks on the 4-hour chart like you just broke structure here to the upside, which technically you did. We did break above, close above, and then we got halted right after we did, but that's right back up against that support level on the daily chart and right into that trendline resistance. So the expectation here is that we're going to see, some sort of pullback. I've been waiting for a place to short. I tried earlier this week, so that you all know, I tried earlier this week to short here. just caught a very little pullback, and then the market rallied again, stopping me out. But here is another prime opportunity for shorts, people who are looking to get on the trend. Because guys, there's no way to beat around the bush here. We are in bearish trend, and the next stop is probably going to be down here around those 119s, 118s zone where we've seen the lows come in at. There's nothing in between here and there. I would be surprised to see a rally out of here, and if so, I'm going to continue to take short positions. You probably see some around 126.50 here is going to be the next area to look to short. So if I'm defeated here, I'm just giving you my play-by-play. If I'm defeated here on a short and the market continues to rally, I will short again around 126.50, assuming that we get all the way back up there, because I see no reason and no specific condition that would lead me to believe that any fundamental change on a grand scale is going to happen. What people don't realize and what they don't think about is the ECB's announcement to basically do whatever is necessary actually means that they intend to print money. They intend to debase and devalue their own currency to whatever extent is necessary in order to stave off financial disaster. Now, normally you would see the market move in a very specific way against euros when that happens. But because of the current situation is the euro even going to be here this time next year? Because of the way what the market is giving weight to, it chooses to look at news from the ECB in a positive light rather than a negative one for euros. Now, it doesn't matter, because eventually, it's going to catch up with them. People are going to realize, hey, number one, all this means is that the ECB, that there's going to be a whole lot of money printing, and there's going to be a whole lot of bailouts for Spain, and bailouts for Italy, and bailouts for France. And mark my words, guys, you guys laughing about France. Wait. Just wait. I'm going to come back to this when it happens, and we're going to go back to the footage, and I'm going to tell you that, look, it happened. But not only does it mean more monetary easing, more printing of money, but also, in addition to that, what it means, there's no real way to accomplish what they want to accomplish. You can't print enough money to stave off this disaster. There's massive outflows. If you look at Spain's monetary outflows over the month, I can pull a number of different reference points to showcase the issues that we're having. And we also saw a very nice, if you read Brian Rich's Friday report, which if you guys don't have that, you should get it. It's really good. His Friday report, he talks about looking at German bonds and the double bounce that happened there, and we're seeing a move in German bonds as well. So anyway, my euro call is still to the short side. Do what you want. Take your own action. Be prepared to accept the consequences either way. We're looking here at the pound dollar. Again, pound dollar coming in right along a resistance level. If we get above it, it's going to be a buy. As long as we're now trapped in a very ugly channel. If you guys look at this, it's not pretty. It's been a lot of back and forth. There have been some opportunities in here, but we haven't done a lot with this, and what we have done hasn't been very prosperous for us. Let's take a look at one that I do want to touch on here is pound yen. Let me find pound yen over here. Pound yen is setting up a very nice, I'm going to drop down to the 4-hour chart so you guys can see it a little better, is setting up a cipher pattern. And so that you guys can see that, I'm going to go ahead and delete this, and we're just going to draw it in. Here, 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 and then back up here. Looking for a sell around, we're looking for a 618 here. Or, excuse me, a 786. Looking for a sell here, 786, around 124.50s. All right, if this market continues to rally, 124.50s is going to be your sell. That's the cipher pattern completion. And cipher pattern, again, I'll just draw this in so that it's a little more patternish for those of you who are not familiar with it. This is a pattern that we here at Triple Threat Trading came up with. Darren Oglesby specifically, one of the traders in our office, many of you know him, was the one who discovered it, and it has been extremely profitable for us. But looking at that 124.50s for a possible cipher pattern sell on pound yen. Now, with that said, there is another opportunity for those of you who want to be a little bit more aggressive with it. Right here. 123.75 is basically where we're sitting right now, is right along this previous resistance level. Market is overbought at about 85 right now and held steady there. So potential shorting here around this level at 123.80s. So keep an eye on that as well. Aussie dollar. I run through this just basically it's breaking structure. So the next play on this, just judging it off the technicals, is to wait for that pullback back up into about 104.31 and look for buying opportunities there. Because this thing, I mean, it's been on a beautiful up move. You bring in the trend line here. Just take a look at it. Just been keeping a beautiful upward movement there all the way along. And if we get a chance to hop on, I mean, that's the way you want to look at it. Where's the structure, support, and resistance coming in at? Where can I get on board the trend? Where can I ride that? Where can I ride that wave? Let's take a look at New Zealand. Where's New Zealand? Do I not have it in here? I swore I had it in here. There's New Zealand right there. Last one we'll look at here is New Zealand. New Zealand breaking structure. Let's go up to a daily chart. New Zealand breaking structure as we saw on that 4-hour, but look at that support level. Now, we've been talking a long time about, just let me draw this in so you can see it. You've got support and resistance. Look at the way that support level becomes resistance again. The way that carries forward. Support, resistance. Once that support is broken, becomes resistance. We create a new support level. Boom, the support level is broken. Now, if you guys remember from way back, we called the double bottom here. We said buy them up. And we took off some profits on the way up, and I said if and when we get back up here, this is going to present pretty significant support or pretty significant resistance. And now we're there. So this is exactly what we've been talking about, and you got to follow this Forex market preview, guys, on a regular basis in order, and I'll bring this back up to your attention. We're at a 618 retracement at major structure support. There is an opportunity here to sell, dropping down to the 4-hour chart now. Market has gone into overbought conditions. What I will wait to look for here is I want to see some sort of sign that the market is going to pull, is going to reverse here and is not just going to continue up. So I'm not going to sell just straight on a limit here. What I want to do is I want to wait for that double top. I want to wait for that doji candle. However it is that you guys look at the market, whatever it is that you're using as your reversal signal, you want to wait for that reversal signal. This is not one that I would sell, just flat out right as it runs up into a resistance level. Reason being for that is just simply because there's not a lot of ratio and harmonics here to go with your structure. You got one little Fibonacci retracement level and that's it. No advanced patterns, nothing like that. So I'm being very cautious here when looking at this sell, but you cannot deny in looking at the daily chart here that, man, boy, is that you definitely want to be paying attention to that level right there. So, a little bit of fundamentals, a little bit of talk about what's happening around the world in this Forex market preview. Do me a favor and leave me a message and tell me what you thought about that, because I can talk about this stuff all day and I can interrelate it. I just don't really want to confuse people, and so I try and stick heavy with the technicals. If you liked it, let me know. If you didn't like it, let me know. Because, guys, again, the main purpose behind this entire thing is to give you value and to give benefit to you, the listener and the viewer. So until next time, guys, good luck and good trading. I'll talk to you soon.